Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf and Nampan of Pacific Private Money. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And again, an announcement that we made last week, and we'll do this up until December 19th. We are moving to 8 p.m. on Saturday nights on KTRB 860 The Answer, which is a sister station of Salem, KDOW, and a very, very strong signal. It's 50,000 watts, so you'll be able to hear us up and down California. All right, today's trivia theme is random trivia. So if you guys don't have anything to start off with, I'm going to bring a couple of things here. First of all,
absolutely.
Okay, global debt is expected to soar to $277 trillion.
Chump change.
Wow.
Yeah.
What?
I mean, what
Do tell.
What's that?
Do tell.
Do tell. Yeah. I mean, I don't know if that means that there's going to be a lot of inflation, or would it just keep printing that money to pay that back? That's kind of crazy. Which probably is the reason why the next thing here. Bitcoin, as of today, was over 18,000. Holy smokes! Didn't that get down to below 10?
Yeah, at one point it was 4,000 again, or 5,000. So it dipped a lot.
Back down.
What was the high? The high was at or near 20,000, wasn't it?
Yeah.
Several years ago.
I don't know. I still kind of look at it and go, there's nothing behind it, and there's other cryptocurrency. So maybe they were the major one, but. Yeah, I'm still.
I invested in Bitcoin, so I'm going to be rich.
Yeah. Did you actually invest in it?
Yeah, I bought $50 worth when it was at 12,000. So it's got to be like $57 now.
Good for you.
Lunch money.
You don't have to pay commission for it, do you? You just.
I'll probably get chased down at some point by the IRS, but we'll see. I haven't sold it yet.
Okay. Well, buying it's easy. It's the selling part that may be tough. Sell to who, right? The last thing.
Hey, Edward, your article. So, Edward, the article on the deficit. So, did they make any point, or was it just an alert that's where we're at?
It was more of an alert, because I don't think we ever, gotten into those kind of numbers. But they did say global. So, I mean, if one company owes it, or one country owes it, another company has it on its balance sheet as an asset, right?
Yeah.
Can't you? I mean, unless you get.
No, they've been talking about the deficit going all the way back to Reagan. And I don't know that there's a lot of agreement as to what's to be done about it. It certainly has gotten, horrific and has gone up geometrically this past year. No thanks to COVID, but it's really. I'm certainly concerned about the never-ending deficits, though I don't claim to know what's. Where's the pain likely to be? Are we really, willing this debt to our grandchildren? I don't know.
I don't know. My threshold is
for practical purposes.
When it hits $2 quadrillion, not one but 2 quadrillion, then I'll be worried. I'll be long gone by then, I'm sure. The last thing I was going to mention here was the IRS claims 9 million individuals who have not filed their tax return yet. But COVID has hampered its ability to contact these avoiders, they call them. And they want to increase the IRS budget. It's almost like paying a commission. You spend 15 billion IRS dollars, right, to try to collect like 40 billion. Sort of like when you get a phone call from a charity and they say, yes, we're raising money for the XYZ charity. And you go, well, how do you get paid? Well, I get a commission, for it. So, every dollar you raise, 40 cents or whatever goes to them. But I don't like that so much.
There are business models that raise money for charities where they keep 90% and give the charities 10%.
Well, yeah, but at least the charity gets 10%. Come on, be a sport, I know.
Kind of a fake business, though, right?
I know.
When you're doing that, that's the problem.
I got a phone call recently. I mean, I always get phone calls like this, and then I always just tell them, I said, you know what, you guys may be a great organization, but I never do anything over the phone. So that ends it right there. And there's some organizations you can check out where you can find out how much does the charity get. And if they get 97%, like I know a couple of charities that do that, then it's, to me, that's a good sign. But anything less than 80% going to them. I go, yeah, something's wrong with this picture. Yeah. So
the IRS, I mean, haven't they been hiring all these people from foreign countries to call you up and yell at you that the police are on their way over to arrest you if you don't pay, if you don't rush off to a Target and buy a whole bunch of prepaid cards?
I know it's legitimate. I keep avoiding them. I'm still waiting for my Nigerian lotto.
Right.
I know I have the right numbers because I got an email that said I had all the right numbers. I just have to send them $5,000 in order to collect my $15 million. That's a good rate of return, huh?
Yeah. Speaking of taxes, California's receipts are actually unexpectedly up, even though you've got COVID. I just saw that in the press this week, and that was I didn't grab the numbers before the show. I've got some other stuff here to share during the hour, but I thought that was pretty interesting. That it just goes to show you, of course, that's a lot of that's based on what happened last year, so they're paying taxes.
Oh, gotcha.
So a little bit of a stutter step there, but anyway.
All right, well, we'll continue on in the next segment. All right, here's our first trivia question. According to urban legend, what animal lives in the sewer of New York? According to urban legend, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. And we have a nice new sponsor here. The Hotel San Luis Obispo is a cultural crossroad where an adventure becomes a life well lived. Located steps from downtown, they're perfect jumping point off of for the Central Coast adventures. Head to the rooftop for sips and small plates amongst lush planted greenery with stellar views over rolling hills. Check them out at San Luis Obispo. Actually, it's called 888-805-235-0700 or go to hotel-slo.com. All right, stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. Edward Brown here along with Nam Phan and Mark Hanf of Pacific Private Money. First trivia question. According to urban legend, what animal lives in the sewer of New York?
Something like 20-foot crocodile or something like that, or alligator, or crocodile.
Alligators, very good. All right, not bad, not bad.
And really big rats.
And giant rats.
Yes,
we're
looking for alligators.
That's true.
All right.
Yeah.
You guys got some information to share now?
Well, I do. So, but first, I kind of just pose a rhetorical question: is anybody getting tired or weary of reading all of the great news in residential real estate and mortgage lending, notwithstanding all of the really horrific stuff we keep reading in the news about the election and Trump unwilling to concede and the virus has spiking up and don't get together for Thanksgiving and, et cetera, et cetera. Notwithstanding all of that, all of the news sources that I check regularly, which have to do with the real estate industry, like Redfin.com or Housing Wire or KCM Blog, and several others, Inman. Some of them are paid, some of them are free. It's just amazing how strong the numbers continue to come out with respect to residential housing. And it's, it used to be, we'd talk about how strong California was, and we've been doing the Best of Investing for 10 years now. And we started in 2010 when the market was still, very much in flux and still going down in several markets. And then in, 12, 13, 14, 15, we got back into double-digit appreciation again. And then we kind of flattened out the last couple of years, again, in California. Meanwhile, nationwide, 4 to 5%, just kind of chugging along appreciation. But California has always been really kind of its own market and a very strong market. But now, because of COVID and because of, the dynamics of housing inventory for sale, new construction starts, and the low cost of money, and the fact that a lot of people are looking to leave the cities and move into the suburbs or move into larger homes or buy second homes, you have this dynamic now where every time I read the housing market reports, I just continue to see larger and more robust growth numbers. And so I just literally just printed the homepage of Redfin News because there were so many articles. I just thought I just have to share these headlines. So November 20th, housing market update. Home buying picks up after election week. Pending sales up 30% from 2019. Here's another one. Home sales surged 24%, the biggest gain on record. Prices up 14% in October, year over year. Another headline, demand for second homes surges 100% year over year in October.
Oh, wow, that's a big number.
Here's a November 13th housing market update. Home prices climbed 15% even as growth in pending sales and new listings slow amid election uncertainty. So, and then here's kind of an outlier survey. 30% of Americans want to live somewhere else due to all the protests.
Wow.
So I guess there's all kinds of things are contributing to people wanting to relocate, but it's just it's pretty amazing. And then you know, this headline: the housing market is hot, but it's not in a bubble. You know, because you still have the bubble boys out there that for the last 6, 7, 8 years have been predicting another major downturn in real estate. Yet the experts, or at least the ones that I tend to follow, say there's absolutely no rational basis to believe in the next 4 years, the years between 20 and 2024, which I've read several articles on predicting the direction of the housing market. They're not predicting any significant downturn in home prices, which I find pretty amazing. But when you really look at the dynamics of the numbers and what's happening with respect to inventory and the direction, the demographics of where people want to live and where they want to move, it just continues to amaze me.
Well, like for your
so
business,
you're going to find.
I was going to say that you know, for your business at Pacific Private Money, as long as there's activity, right?
Yeah.
You guys do well because of people buying, people selling, and it's just constant activity where people need loans. And by the way, whenever you hear bubble boy, it's Moors, not moops, you idiot.
The moops.
So do you think all these real estate websites? Do you think all of these real estate websites will update their search criteria to include like not close to protest zones or close to a vaccination center or something else?
You know, I mean, you laugh, but I don't know. You know, if you think about it, they do have things like, you know, is it considered a crime area, right? You know, or how much crime has happened. Of course, I guess.
Does it have a view? Yes. Is it close to a protest zone? Yes. Forget it. I'm gonna scratch that one off my list.
Well, most of
so here's one last set of numbers that I thought was interesting. So, so this is a trailing 12-month number, which is usually a lot of real estate numbers. When they come out every month, they're comparing year over year. So this is October of 2019 to October of 2020. Existing home sales came in at what this article refers to as a whopping 6.85 million, beating all estimates. And it's the highest since 2006. Now, and year-over-year numbers were quite a bit higher in the heyday of, you know, the mid-2000s, the early 2000s, before everything blew up. You know, 2, 4, 5, and 6. The numbers were pretty high, but 6.8 million. That's just that's surprising. One would have never have guessed that at the beginning of the pandemic, especially since a lot of people were predicting the pandemic would force real estate prices to dip, you know, 20 to 30%, maybe higher. And of course, that didn't happen. And in fact, home prices are up, and nationwide appreciation is the highest in decades.
Yeah, and the same thing, you know, the stock market getting, if not at the high, you know, very, very close to it. Guys, hey, second trivia question here. This is a sports question. What Chicago Bears running back was known as the Galloping Ghost? You have to go back in time for this one. All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. And also want to make a mention here for Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. Love that pizza. Check them out. Mike's Pizza in San Rafael. All right, stay with us. The Best of Investing is going to be right back. Welcome back to the Best of Investing. One more time, Edward Brown here along with Mark Honfin, non-fan of Pacific Private Money. Second trivia question was a sports one. What Chicago Bears running back was known as the Galloping Ghost?
You sure that question isn't the Galloping Goat?
No, the Galloping
Not the Galloping Goat, the Galloping Ghost.
Galloping
All
Ghost.
right.
You have to go way, way
I'm going to
back.
know the name when you say it, so tip my tongue.
Yeah.
Red Grange.
Oh, that's
Oh,
right.
Yeah, old time running back. Okay.
Galloping
Tom, do you want
Ghost.
to continue on with?
Yeah, just in the last segment, Mark was talking about the housing activity and how it hasn't been this high since 2006. You know, but the interesting thing that we're hearing too is the number of homes or home sellers that are hesitant to list their home during this time.
Oh.
You know, we've read that inventory is really tight. People want to move, but there's actually still an undersupply of available listings. So just imagine when we get past this pandemic and we'll see what happens over the next few months as various vaccines are made available.
Yeah.
But how many people who are sitting on the sidelines will now be listing their homes? And but at the same time, you have to wonder, are people going to be as inclined to move, knowing that maybe they don't have to now, shelter in place in a bigger place? We've talked about this on the last few episodes too.
Well, it's also going to be people who are going to move back to the city, right? I think what's going to happen is employers in the city are going to say, when we say the city, the closest one to us is San Francisco. They're going to say, you know what, it's too inefficient to have you work from home. So come back to the office, and we'll still figure out social distancing, which is interesting because I was just reading some article where they were saying that masks are not only not doing anything, but they potentially could be bad because of, I guess, you getting it with yourself, something like that.
You got to stop. You got to stop reading those conservative and libertarian blogs, I tell you, because I don't know that I believe that for a moment.
Yeah.
I think masks absolutely do help. They don't prevent, but they certainly help from inhaling and or breathing out. It mitigates it to a certain extent. But anyway, that's probably not a winning argument to have on the radio.
Did you read like the last page of a Google search, like the 100th page, to come up with the hacks don't work? To go to the last page of a search result.
It was signed by I don't believe anything. That was the blog master on it.
Hey, you know what's worth talking about a little bit though, because it's funny. First the articles come out every month in the paper, and and I get the local papers too, the San Francisco Chronicle, and I live in Marin County, so I get the Marin IJ, and headlines: home prices up 15%, and then you read into the article and they say the median home price is up 15%. But here's the thing: then other writers will pick this up. In fact, I even in the segment before, I talked about how these headlines say home prices up 15% in October, and here's a reference to price increases of 15% year over year is a concern. So they're not explaining that they mean home price, a median home price, not actual home prices themselves based on price per square foot. And over the years I've shared this on Best of Investing, that you have to really watch out when you're reading these, because certainly if you're in fear of a real estate bubble and you hear 15% year over year price increases, or you're thinking, oh well, my home just went up in value 15%. No, it didn't. The reason for the median home price going up as high as it has is because home buyers in general, both in California and nationwide, are favoring bigger homes in the suburbs that might be higher priced. They're leaning towards higher priced, larger homes. So now if you go to the Case-Shiller Index, which I've been tracking for many, many years, I have my own little spreadsheet on it so I can refer to it. Now it's 60 days behind, so we only have the numbers for August, and September numbers come out next week. But August home price appreciation index based on actual sales, based on price per square foot, not median. Nationwide, the numbers are up 5% valuations through August, and in the Bay Area is 4%. Bay Area is actually a little bit less because, of course, we've had many, many years of inflation that beat nationwide for years, where we were actually, even according to Case-Shiller, we were in double-digit true home price appreciation. But the last couple of years, the San Francisco Bay Area in particular has kind of leveled off to about a more healthy and sustainable 4 to 5%. So even though so caution listeners when they hear 15%, that is a median value. That means half the homes sold higher and half the homes sold less. It's not that your particular home is now worth 15% more than it was a year ago. That has to do with home pricing.
Yeah, I was going to say, in fact, based on what you were just saying, in theory, you could have actually houses going down in price. Because
well, absolutely, and right before COVID, let's just looking at 2019, the second half of 2019, we were seeing very small price decreases in price per square foot. Home prices had leveled off and were going down a little bit. There were some year over year, between 1% and 2% less than the prior year in terms of price per square foot. And what was happening is that it's still a seller's market, or was still a seller's market, but there were a lot of homes that were being purchased, at a 5 to 10% below asking, as opposed to 5% above asking. Now, of course, we're back to a place where a lot of homes are selling above asking again because of lack of inventory.
So, would you think that, based on like looking at price per square foot, is probably the best way to? Yes,
absolutely. Because that's true valuation, and Zillow, for all of its imperfections, they use basically a price per square foot model to estimate what a home is worth. Now, they don't know if it's been recently remodeled or if it's a piece of junk that hasn't been remodeled in 30 years. So you can't really use it as gospel. But those online valuation systems, attempt to use a price per square foot model to give you a value projection for your home. So anyway, keep that in mind. That's another reason why we're not in a bubble, because we're not seeing true 15% appreciation. It's more like 4 to 5% right now.
Gotcha. Okay, we're going to cut to a break. When we come back, we've got an email question and want to hear deal of the week. Third trivia question: what character in Monty Python and the Holy Grail insists that it's just a flesh wound? What's the name of that character? All right. Mark's shaking his head. Is that your favorite movie? No, come on. Call 888.
Flesh wound.
There you go. Call 888-912-1190. The first caller with correct answer is going to win that Danny certificate. All right, stay with us. You're listening to the Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to the Best of Investing. Oh boy, I tell you, we were laughing off stage here. I'm Edward Brown, along with Mark Hanf and Nam Phan. Third trivia question: what character in Monty Python and the Holy Grail insists that it's just a flesh wound?
We were laughing about that scene. I know the scene and I know the situation where the guy keeps losing his limbs and saying it's merely a flesh wound, but I don't remember what the character's name was.
The Black Knight.
Oh, the Black Knight.
Yeah,
okay.
Exactly. All right, guys.
Monty Python, some of the best movies ever made.
Yeah, okay. We have an email that comes in because we've been talking about the Pacific Private Money funds. You have a few of them. Question is, do your funds get audited?
Yes.
Next question.
One's gotten audited. The other three, because they're so new, haven't been audited yet.
Not quite yet.
They will next year.
Well, so here's the question behind the question. We read periodically in the newspaper stories of individuals who have been accused of running a Ponzi scheme or accused of mismanaging funds that they have raised from investors. And so we get questions from potential investors who hear our ads on the radio or see our ads in the print media or hear our radio show, and they go, well, how do I know you're not going to just take my money and, go off to Mexico or Hawaii, or something similar to that. And in other words, what they want to know is, what kind of protections for investor capital are built into the model. And so at Pacific Private Money, we've been raising capital in mortgage funds since 2013, so for the last 8 years. And from the very beginning in our very first fund, we were coached by experts in the industry on best practices for raising money from private individuals. And they said, look, there are hundreds, if not thousands, of real estate funds and mortgage funds known as private placements throughout the United States. It's a very, very common tool for raising capital. Mortgage funds in particular, if you're going to raise capital to fund real estate secured notes, a best practice would include third-party fund administration, for example. It would also include annual audits from a CPA firm licensed to conduct those audits. Those are two of the more common yet costly methods for providing a sense of security that we're just not the only ones making all of the decisions with investor capital, and that there is some oversight, third-party oversight. And so when we launched the Pacific Private Money Fund back in 2013, we hired a company, actually the company that helped us design our fund, that we paid to help us design our fund. They also had a related business that did fund administration. What does that mean? Well, they manage the books, they manage the bank accounts, they do bank account reconciliations. They don't handle the cash, because most often the sponsor, in our case, us, Pacific Private Money, would handle the cash, meaning, we originate a loan, we need to get the funds wired to escrow in time, because a lot of our fundings are very quick. So we're still handling the cash, but the accounting for the cash, what's happening for all the money that goes in, all the money that goes out, where is it going, and the accounting for that, that's done by the fund administrator. So they manage QuickBooks, they reconcile the bank accounts, they manage all the investor accounts. So when money is deposited, it has to be identified to an investor. One time somebody questioned me, well, how do I know that investor capital is even going into the fund? Maybe it's going elsewhere. Well, if that were to happen, then the investor would certainly know that within 30 days, because they'd get no information, no confirmation from the fund administrator. They'd get no statements for their account balances, and they wouldn't get any distribution. So it's certainly that kind of activity wouldn't last very long. We'd be out of business pretty quick. So yes, we have our funds annually audited. We use third-party fund administration because, quite frankly, they do a great job of providing the accounting, managing, and the bank accounts. And it's an ongoing daily, weekly process to communicate with a fund administrator exactly, identifying for them when it's not obvious, where the funds came from, who the funds are going to, what loan is it part of. And at Pacific Private Money, we do loan servicing in-house, but our fund administrator also tracks all of the fund loans, the fund portfolio. So there has to be a reconciliation between our accounting on the loan servicing side and then the accounting that they do to reconcile the fund portfolio. There are a lot of checks and balances. I know I'm getting into the weeds, and this is really more for somebody who has toyed with the idea of making an investment in a mortgage pool fund because of the fabulous yields we can provide, anywhere from 7% to 10%, depending on what kind of fund you pick. Really, the key, if you're listening and if you've considered investing in a fund, is you want to ask 3 questions of any fund manager you're considering investing with. Do you use third-party fund administration? And if not, why? Do you conduct, is your fund annually audited? And then third, ask them if they carry E&O insurance. E&O stands for errors and omissions. Do they have, are they insured in case, and do they have a fidelity bond for the people who work there? So proper insurance is also very key. We carry all of that. We've got E&O, cyber liability, and fidelity bonds on our employees. So, for more information or to ask any questions on anything you just heard or anything at all relating to investing in mortgage pool funds, we have 4 of them to choose from at Pacific Private Money, and we can be reached at 415-883-2150. please go to our website, because there is some good introductory information on our website. That is pacificprivatemoney.com.
Okay. And since we only have about 1 minute and 30 seconds, we can't get into a deal of the week yet. But what we'll do is, Nam, when we come back, you do have a deal of the week to share, because we want to explain to people in these mortgage pool funds the kinds of loans that you're doing. Because when people hear 7 to 10% interest, they got to be thinking it's too risky. But there's not really that kind of risk that they're thinking. Go ahead.
Right. Also, just we haven't mentioned it yet. You probably mentioned it last week. So we did a live webinar a week and a half ago, and we recorded it. It's about an hour in length, and it talks about all 4 of our funds in high detail. That is available to get a link to. Basically, if you contact us at pacificprivatemoney.com, you could use any email that's on our website, but we will send you a link. It's obviously something we can't email to you because it's a recorded video, but we're happy to share that with you. So we do those webinars about every other month, and we just did the last one about a week and a half ago, and contact us for a link to listen to that recorded video.
Very good. All right, when we come back, Nam's going to share a deal of the week. Stay tuned. You're listening to The Best of Investing, and we're going to be right back with some closing comments and a deal of the week. Don't touch that dial.
Doesn't quite sound as good, except the microphones are deal of the week.
It doesn't, but welcome back to The Best of Investing. Last time for today, Edward Brown here along with Mark Hunt and Nam Phan. That was a weird intro, but we'll go with it. So we didn't have a trivia question, but Nam, share a deal of the week with us, please.
Yes. Okay. So this week's deal of the week is for a loan of $2.1 million. That's a good sized loan. Although it's our loans over the last 6 months have been averaging anywhere from around I would say around $1.5 million. So we've grown accustomed to what we last year would have been a big loan, but this is pretty calm now. So $2.1 million loan in Marin. It's for a couple. One, the husband is a contractor builder, and they found an opportunity to buy a home that had been fire damaged. So this is one that they are moving from a home that they have in Mill Valley, and they're moving to San Rafael. Found a home that was slightly fire damaged, so they were able to get it under market, but they needed to close quickly. This is a loan that will be closing in a 2.5-week close, but a couple things. One is, and we've mentioned this on several past shows, banks just can't finance loans that quickly these days. They're so overwhelmed with refis and new purchase transactions that it's taking them on average 45 or 60 days.
Well, especially if something's been fire damaged, depending upon how much damage has been done, right?
Yeah, I'm told this one has mostly cosmetic damage, but that might have, but oftentimes banks, conventional lenders, aren't going to make a loan on a property that has that kind of damage. They're going to say, well, this property has to be repaired first. So obviously this borrower, being a contractor, knows what it takes to repair this home. So they're able to get it slightly under market. They'll be able to do the rehab work, and then whether they stay in it long term, who knows? But this is a loan that came to us pretty quickly. It's a loan that has to close within 2.5 weeks. We're going to be able to close it on time and fund it on time. But again, it's a combination of things: fire damaged property, relatively fast close, and a bridge loan. All 3 of those you're not going to get with a conventional lender. Yeah. Obviously, the refinance will be with a conventional lender, and that's where we typically are an ally to a your typical bank. Again, just a representative of what we're seeing these days. High loan, fast close, just something a bank's not going to be able to do.
What was the value of the property? The
value was, in this case, all we have here is a purchase price of 2.3. So, if it's slightly under market, I know the area, it's probably like 2.6.
Was there cross-collateralization on this?
Yeah, there was a cross. The other property, they had an existing loan of $730,000. They're taking a second out to use, and then we'll get paid off when they sell the departing residence.
How much equity was in the original house?
I don't have the equity. I don't know how much they have in the departing residents.
Or do you know the CLTV?
CLTV is, I have to guess, it's about 65%.
About 65%. Yeah, because you
This
guys
is
are
typical.
going to do
Yeah.
a $2.3 million loan on a $2.6 million purchase. You know they're going to put up more collateral in that, of course.
Yeah.
Which is the reason why Pacific Private Money has not lost any money since you've been in business, is because you're always over collateralizing the loans. And people do not want to walk away from that kind of equity. They'll just go ahead and just sell the house if they have to, right?
And we've got you for backup, Edward.
Yeah, there you go. Hey, you know what? Believe it or not, it's time to say goodbye. This was kind of a fast show. It was. But before we do, give out your information one more time.
Sure. They can, if you want to get a loan or invest, give us a call at 415-883-2150 or go to our website, www.pacificprivatemoney.com.
All right, here's our thoughts for the day. It's important to pay good attention to election signs in the front yard. Last time I voted for a real estate agent. And be kind to your dentist. He has fillings too. All right. Ba-dum-bum. All right, tune in next week to the Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
So long.